All right, guys, in the last 16 hours, we've had two bits of news that have absolutely rocked the market. The first piece of news that rocked the markets was an unsubstantiated report that SpaceX has written down the value of their Bitcoin. It came from the Wall Street Journal, and it comes from a little paragraph at the bottom of an article that was written about SpaceX. And what it says at the very bottom of the article, it says the documents also show that SpaceX wrote down the value of the Bitcoin that it owns by a total of $373 million last year. Now, Crypto Twitter went and interpreted that SpaceX had actually sold their Bitcoin, which I don't think is true. And we're going to talk about that in a couple of minutes. The other bit of news that rocked the market was this bit of news over here, which actually is quite serious news. And that's that Evergrande, which is the second largest property developer in China, has actually gone into bankruptcy. Now, in China, this is a massive, massive, massive thing. Evergrande, the second biggest property group in China going down, is massive news. And we're going to talk about why this could actually spread into contagion. Now, when you take those pieces of news and you superimpose them on the market that we have now, let's talk about when I say the market that we have now. We're not dealing with a normal market. We're dealing with a market where the volume on the markets and the liquidity on the markets is lower than it's ever been. So if you look at the Bitcoin trading volume chart, what you realize is that the trading volume on Bitcoin is the lowest that it's ever been. And so when you take this news, or when you take as much news as we just had, or two events that we've just had, and you superimpose it over the fact that you've got no volume in the market, the problem is that you start getting a cascade of liquidations. You get all the leverage starting to get liquidated out the market. And that's exactly what happened last night. If you look at the Bybit chart, so you look at the Bybit chart, the Bitcoin price on Bybit went down to 24,207. And that's what happens when everybody's stop loss is hit and there's no buyers in the market. And this wasn't only Bybit, it was actually many of the leverage exchanges. There was $1 billion worth of longs, which were complete, well, 834 million longs, which were completely wrecked, and 207 million worth of shorts that were absolutely wrecked. So take the combination of no volume in the market and no liquidity in the market, superimpose it with two bits of bad news, and then a little bit of like bad news on the stock markets and on the macro markets, because we also have a situation in the United States at the moment where the 10-year treasury yield is now trading at 4.27%, which is very high. In fact, what I want to do is I want to show you when the last time that this 10-year treasury yield, it was in 2007 was the last time that the 10-year treasury yield was as high. Now, what does this mean? It means that people don't want US debt. It means that people are dumping US debt. And when you take a country that has so much debt like the United States and people start dumping their debt, that could be a recipe for a catastrophe in the making. And that's what's weighing down on the markets. Now, combining this all together, Gareth wrote a tweet. And in the tweet, he says the following. I'm not going to read the whole tweet. It says, should 25 break, 20K becomes the next stop. Should 20K fail, the 52-week current cycle lows, it will be tested at 15,700. Then he says 12 to 13,000 is still very much on the table. And he even says Bitcoin can go as low as $9,000 to $10,000. So when I read that, first thing I did was I picked up the phone to Gareth. It was like 4 o'clock in the morning his time. I said, Gareth, listen, wake up, buddy. You got to be on Banter as soon as you wake up tomorrow morning. And he's agreed. So later on in the show, Gareth is coming on and he's going to talk us through the thesis. And then at the end of the show, you're going to tell me whether you think Gareth is right or Gareth's wrong. So listen, I know it's Friday. And usually on Fridays, what we do is banter. But I just figured that today it wasn't time for a banter. Today we've got to deep dive into all of these things and we've got to decide whether this is a problem and whether we're going to continue to go down or whether this is just a short-term thing and we're going to be back up at $27,000, $28,000 and $29,000 very soon. So big show. Let's do this, guys. Listen, Ben Cowan, when he came on the channel and he said August was going to be a rough month for Bitcoin, didn't think that he was this right. I don't know if you remember, but he came on the channel and I think he spoke about this thesis and he said that the average return of Bitcoin in August of its pre-halving year is actually negative 21.23 or 21.3%. He says if you exclude 2011, the average return is 11.7% negative. From the monthly open, 21.3% would put Bitcoin at 23,000. 11.7% would put Bitcoin at 25,800. And the worst news is that September is also a bad month for Bitcoin. And it has been brutal. I mean, you guys have definitely seen it. If we look at the bubbles and we look specifically at the weekly returns. So this week, Bitcoin down 10.64%, Ethereum down 9.29%, XRP hit because of the interlocutory appeal that the judge has granted. Well, the judge has granted the SEC the right to appeal and to get an interlocutory appeal. We'll talk about that. Rune, the only one that's actually up this week. Doge down 17.4%. So it's been, wow, it's been absolutely brutal. And I don't know if you guys were awake when this whole thing was happening, but it was scary. It reminded me very much of the flash crashes that we used to see in the 2017 bull market. And one of the characteristics of these flash crashes is, one, we would have these big wicks that used to go down. So if you look here specifically, you could look at the leverage exchanges, perpetuals exchanges. We used to have these massive wicks that used to stop everybody out. So you can see we got one of those wicks and we went all the way down to 24,200. And then the other thing that I saw yesterday, which reminded me of these flash crashes that we used to have in 2017, is when the exchanges report technical issues. Mysteriously, the exchanges always used to report technical issues when people were getting stopped out. And yesterday, my time, 12:14 a.m., Coinbase has experienced systems issues. Coinbase Global's, our systems are currently experiencing issues. While we fix all of this, your funds remain secure. So listen, there's a ton to talk about today. That's why I decided not to do a banter and to rather just come here and just have a great show with you guys and just chit chat and just see how everybody's feeling. So listen, if you are new to the channel, subscribe. This is the best time to subscribe. If you are a subscriber, smash the like button. Let's obliterate the like button. As I said, Gareth's coming on later in the show. Let me know also if you're still alive in the Bybit trading competition. I got liquidated last night. I had a GMX position. I said I'm going all in or nothing. It was just one of my accounts that I set up for the competition, and I guess it was nothing. I've got nothing left. Also, let me know if you're present. Yassine, I see you here. 𝗏𝗏𝗃, let me know if you're here. Life's a Trader, I see you here. Renee Montenegro, let me know if you're here. Remember, since this is a Friday, this is brought to you by NordVPN. Now, I keep saying to you guys, you have to be using a VPN. Why do you have to be using a VPN? There's a good reason here. When you surf the internet, no matter which site you interact with, no matter if it's a decentralized exchange or a centralized exchange or a DeFi application, that site stores your IP address. Your IP address is a unique identifier that your computer has. And your IP address gives away information about where you are in the world, and it allows hackers to hack you. It allows exchanges to identify you. It allows law enforcement authorities to call on record. So if the American law enforcement authorities wanted to get all users to Uniswap, they would go to Uniswap and they'd say to Uniswap, even though you are a decentralized exchange, we know you have a centralized front end. Give us a list of all the IP addresses that surfed, and that way your unique identifier would be given to the US government. Now, you don't want that, because the US government can then correlate it with all the other websites that you've been at and say, okay, we know that this person has done this, therefore they can identify who the person is. That's how they catch hackers. Now, one simple way to fix that is you get yourself a VPN, you spend $3 to protect yourself, and you don't give away your IP address anymore. In fact, one day you can wake up and surf from Lisbon, one day you can wake up and surf from Bermudas and Canada, and that way no site actually knows where you are. You're not giving away the information, or you're not giving away the information to hackers. So do that at the same time. Support Nord, because they are the crypto VPN and they have been loyal to us and allow us to bring you these amazing shows. Today we have Gareth coming on. He'll be on in about 20 minutes, and we have a lot to talk about. Cool. I think that's it for the formalities. Let's get into the fun of the show. I mean, at least we can say that we're out of this 29,000 range. We were complaining the other day that we were stuck in this 29,000 range, which, if I remember correctly, lasted about 50 days. So let's just quickly see how long it lasted. Lasted 56 days. At least we're out of the range, and we now have some volatility back. So I was looking at the volatility index. That is the CVI. You can actually see that we are actually, let's see if we can go to the 3 month. You can see we had a big spike back in volatility, which is, I know it feels like a bad thing. I know it feels like we shouldn't be wishing for the volatility when the volatility is done. But let me tell you, movement in this market is a good thing, because staying in that same place, people were becoming complacent. People were becoming disinterested. Fund managers were becoming disinterested. Institutions were becoming disinterested. Normal crypto retail investors that have spent their time in retail and are completely obsessed with crypto, they were also becoming despondent. They weren't interested in the market. But guess what? Today, everyone's interested in the market again. So you've had all these funds sitting on the sidelines, and they seem to have now come back into the market. I saw a tweet from James Van Straten saying, look, the red here is the institutions starting to accumulate, and you can see that they're starting to come back into the market. Now, what I suspect is going to happen is we're going to get these institutions who were selling. You can see they were selling over here and started buying over here. I think now that the prices come down, we've got the interest back. And if we've got the interest back, they'll probably start accumulating. The other thing which is good is the exchanges are starting to earn fees again. The protocols are starting to earn fees again. Like we've been talking about GMX and GNS. When there's no volatility, the platforms don't make money. The bots don't make money. The platforms don't make money. Now we've got the volatility back. I went and looked at the GMX fees. In one day, they did $1.32 million worth of fees. Can you imagine that? $1.32 million worth of fees. So at least we're out of the dead range that we've been at, that demotivating range. I know a lot of you lost interest, and I know that there's a lot of people here now that are watching this and weren't here a couple of days ago because it was just so boring. I don't blame you. I mean, for us, making content every single day was a challenge, but we found a way to give you guys content every single day and to try and keep it interesting. Let's look at the charts. Let's look at where we are on the charts and then make a decision where we're going to go. So when I look at the charts, let's quickly go to the charts here. So I said it earlier on Sheldon's show. I joined Sheldon for a few minutes and I said, look, we have broken through this trend line, which is, sorry, I'm just fixing my mic. We have broken through this trend line, which is not a good sign. I mean, this is the upward trend that we've been on since the beginning of the year. And we did break below this trend line. Not good. Even worse, we broke through the 200-week moving average over here. This is a very, very, very important time frame for Bitcoin. Why? Because if I click on the weekly here and I zoom out, you can see that there's very few times that Bitcoin has been under the 200 weekly moving average. It was once very shortly here, once here during COVID, and then in the bear market of last year, we were under it for a while. And now we may break under it again. We'll only know on Sunday because it's a weekly. So we're looking for the weekly close here. But that's the next level that we don't really want to break below, right? And then if we break below that, then the last level for me for the bullish thesis is about 24,800. If we break below this 24,800, which is the previous higher low, then I've got to revisit my thesis. But for now, I'll tell you, I'm not revisiting my thesis. I still think that we're in a bull market. I may change my view. If we close below the 200-week moving average, I may reevaluate. If we close below the 200-week moving average on the weekly, and then we close below this lower low, then we're going to have a very different show on Monday when we get together, or maybe I'll even do an emergency stream on Sunday, or whenever it happens, because that for me would say, okay, let's question our thesis. The other two things that are keeping me a little bit bullish or sway towards the bullish side is this. I look at the Bitcoin dominance. And if you look at the Bitcoin dominance has been on this upward trend. Let me just make my chart a little bit better. Let's just say that that's the chart over there. But this Bitcoin dominance has been on this upward trend. And now the Bitcoin dominance is actually broken up there. Now, why do I say that's bullish? Because if people were really panicking, the first thing they do is get out of altcoins and get into Bitcoin. And that's not what they're doing here. In fact, they're going more into altcoins as Bitcoin goes down. They may think that things are cheap or that these are good buying opportunities for altcoins, but they're going out of Bitcoin and they're going into some altcoins. And then the last thing that I saw, which is a glimmer of hope, this comes from Joe the Irishman, who's one of our researchers. He says, the ETH BTC chart has been on a downward trend, and this ETH BTC chart just broke again. So that's the other thing. So that is how I'm looking at the charts. And I think now we get to decision time. So now it's time for you guys to make a decision. You got to decide if you are one of these people, which are the long-term holders, the people that accumulate in the sideways movement and accumulate when the price goes down, or whether you're one of these short-term holders. And these short-term holders are completely wrecked. They completely got flashed out in all this leverage. You got to decide now. You got to decide which way you're going to be going. if you are one of the long-term holders and you've got diamond hands, this may be a good time to start accumulating. I'm not starting to accumulate now, but I'm going to show you in a second why I think it's a very good time to start accumulating. The reason why I said this is because yesterday when I was planning the banter for today, we're going to have a big banter for today. One of the guests that I brought onto the banter said to me, look at this chart. And he showed me the Bitcoin chart. He showed me this chart over here. And he said to me, what do you see in this chart? I said to him, I don't know, it looks like we're in an uptrend. He says, yeah, but there's something in this chart that you really, really, really got to see to understand how to play this dip. And I was a bit stumped. I was like, okay, what do I need to do? And he says, look at the uptrends in this chart. He says, look at what drove the Bitcoin price up. I was like, okay, well, what was it? It was a pump here. It was a pump here. And it was a pump here. This is the ETF pump. And he says exactly. He says, the whole pump since January has actually been in 3 pumps. So if you look at the price of where we were in Jan, so let's take somewhere here. Let's take November. If we take where we were in November, which was about 15,500, and you take where we are now, we're up 69%. We've been up as high as about 31,600, which is 100% up. He says, look, that whole pump has actually been caused by 3 green candles. And the thing is that if you were out of the market for 1, 2, 3, 4, 5 days here, 1, 2, 3, 4, 5 days here, and 1, 2, 3, 4, 5 days here, you would have missed every single one of those returns. So you take a scenario where you have, just put a line here and draw a line over here. You take a market period of 267 days. That's almost a year. That's like 8, 9 months or whatever it is. And you say that the pumps all came in about 15 days. And if you were out the market in those 15 days, you did not catch the pump. Now, with that in mind, when I look at the Bitcoin chart now and I say, okay, look, it may go down more. And if it does, we just keep accumulating. But if I missed the pump, if I missed the 5 days of the pump, or if I only catch 2 of the 5 days of the next pump, the problem is that you missed 3 of those and you've missed the entire return to potentially an all-time high. And so now you've got to start deciding whether you're in this or you're out, because this is a good time to shake out the weak hands. If you are part of the weak hands, well then, this is your time to get shaken out. This is your time to be part of these people over here. But if you're not, then this is the time where you want to be accumulating. You want to become more of the diamond hands. And you've got to keep this chart in mind. Bitcoin isn't going to die. Okay, we may go down. And even if the naysayers are right, we may even go down to 15,000. I don't believe it's true. We'll talk to Gareth about that later. But remember, if you're not in the market, then the problem is that when you want to get in the market, you're going to want to get in the market 4 or 5 days into these pumps. 4 or 5 days into these pumps, you've missed 80% of the returns. You need to be buying the red and you need to be selling the green, not the other way around. And I know that a lot of you were sitting here on the sidelines going, I'm not going to buy Bitcoin now because I'm going to wait for a dip. I'm not going to buy my other favorite coin now because I'm going to wait for a dip. Okay, the dip's here. May carry on dipping more. Who knows? Probably will. Okay, but now is the time when you should be accumulating. You got to close your eyes and accumulate. And if you need to explain this to your wife, like I need to explain to my wife.
Question: what do you mean by happen?
So if you need to explain to your wife, and I've come to a point now in my life where I need to explain to my wife where I take more money out of non-crypto and I put it into crypto, right? I have to now explain it to my wife because we made a deal a long time ago, no more money into crypto. That was after Luna. So if you need to explain to your wife or your other half why you're putting money into Bitcoin, just remember this.
Well, the question, did that happen, begs the question, what do you mean by happen? Because when you are dealing with fundamental realities and you pose a question, you have to understand that the reality of the concepts of your question, when you're digging that deep, are just as questionable as what your question. Well,
you get it. You just tell her that the reality of the question, it depends on what you're questioning. That'll help you. Oh well, let's get into it. Let me know in the chat if you are buying, not buying, if you're bullish, bearish. Sounds like a lot of you are still upbeat, which is good. I'm happy to hear that. I hope the next part of the show doesn't dampen your mood, so to speak, right? Like I don't want the next part of the show to dampen your mood. But we have to talk about what's actually happening in the market. What is it that's actually scaring the market? Is it real or is it not real? Because we can all get swept up in, diamond hands, buy the dip, bro, because we go to crypto Twitter and because that's what other Bitcoin investors and crypto investors that are absolutely petrified right now are projecting through their avatars on Twitter. They're projecting the strength. But we need to look at the reality and then make a decision based on the reality whether this is a time to start buying or whether we should wait a little bit. Now, I said to you, I'm going to start buying, but I'm starting to buy very, very, very slowly. And I'll show you why I'm starting to buy very slowly. I think there are headwinds. I'll show you what the headwinds are. We covered China this week. We were one of the first channels in crypto to make a video around China. And when we made the video around China specifically, we looked at the data that came out of China. And we said that no one's investing in fixed assets. And we said that the inflation rate, they're now in deflation. The economy has slowed down so much that they're now in deflation. We showed you that their GDP has gone down below the forecast. That's bad for China, which is one of the biggest producers in the world. Anyway, today, or last night, depending on where you were in the world, we got news that Evergrande, one of the biggest property companies in China, it's the second biggest property company in China, has actually filed for Chapter 15 bankruptcy. Now, this is like bankruptcy, okay? So what does this mean? Why is this such a big thing? It's a property company in China that's filed for bankruptcy. You will remember, if you've been around for a while, that the Evergrande debacle began actually a long time ago. It began when the markets were near an all-time high. And this is when the contagion started. When Evergrande in China started to show cracks, that is when the market started to come down. That was around September or even a little bit before September last year. This is a big problem because we know the Chinese economy has slowed down to such an extent that people aren't spending. But now the property companies are starting to go under. And there is a big problem when the property companies start going under in China. And this is the big problem. You've got to pay attention to this. The problem when the property markets go down in China was beautifully summarized by this guy. Listen to what he says.
Diane, I think it could get a lot worse. Let me just give you one statistic. 70% of the household wealth held by the normal Chinese people is in real estate. When real estate goes down, it just doesn't affect the markets. It affects everyone in China. So as one of your former guests has said, I have never been this concerned about Chinese economy in my life.
Are we witnessing the makings of a lost decade for China?
Well, if you go back to the mid-1980s, Japan was going to be number one. It was going to control the world. So between 1986 and 1992, it went through its bubble period. But it hit a situation pretty much like today, Brad. A lot of money was invested in real estate. Real estate prices went crazy. And then all of a sudden there was a collapse because Japan then suffered from deflation. So their Nikkei, which was their stock market in 1992, which was about 30 or 32,000, dropped to 8,000. And really, I think it's probably only been within the last year when it's gone back up. Deflation in Japan.
So listen to what he says. That's one of the key points. He says, look, when this happened in Japan so long ago, their market only recovered now. I mean, that's huge. Now listen to what else he says.
It's a lot like you could see in China.
And then, Dennis, I want to ask you, just in terms of, so the real estate sector, the latest shoe to drop, if you will, there in China, what does China need to do? Do they then have to turn to households to stimulate their economy, or is there not enough there?
Good question, Diane. Two things. No, there is not enough there, in my opinion, for the Chinese to deal with it. The fact that they dealt with the 10 basis points and last week said to real estate companies, we're going to give you another year to pay off on your debts, it's not enough. I think it would take significant intervention by the Chinese at this point. It hasn't come. I guess yesterday, we're Wednesday, but on Monday there was a meeting of the Politburo, which is the senior grueling group.
All right, so the property sector is collapsing in China right now. As he says, 70% of Chinese wealth is sitting in the property sector. Now imagine a country where 70% of their wealth is sitting in real estate, and the real estate market is actually collapsing. Imagine what that does to everybody. No one has savings. No one can repay their debts. So he says, 𝗙𝗵𝗵𝗆 says, cultural context. In China, real estate isn't an investment, it's a tradition. For generations, a large majority of Chinese citizens have considered property as the gold standard for wealth storage. The domino effect. Evergrande's potential bankruptcy isn't an isolated event. It ripples. It's a developer's dilemma. So all the developers start to collapse. When the developers start to collapse, well, who gave the developers all the financing? The banks. Who gave the banks the financing? Well, that was financed by the government and by bondholders and by equity holders in the banks. So this is a massive, massive, massive collapse. If the China property sector collapses, then it's going to be a worldwide contagion. There's no doubt about, in my mind, that if the China property sector collapses, it's going to be a worldwide contagion, which is going to spread to the US and into many, many, many other economies. And you can already see that in China, the contagion has begun. The China's biggest private sector developer by sales missed interest payments. Missed interest payments means you're going to go into default and you're going to go into liquidation at some stage. China's state-owned property developers are warning of widespread losses, fueling concerns that the housing crisis is expanding from the private sector. It is a huge thing. A lot of these property developers are starting to go down. And now the Chinese government needs to make a decision. The decision is, do we give stimulus into this economy to stabilize the economy? Because remember, the world has a playbook for this. The playbook is what happened in the United States in 2008. What happened in the United States in 2008? Well, the property sector collapsed. It almost took down all the banks. And what happened? The Fed started to print money. And that's where we learned that the Fed can print money to try and stimulate the economy when economies are collapsing. So there is a playbook like this. And the question is probably not if, but when will China switch on the economic stimulus and put money into the economy to prop up these lenders? So it's a bad situation, but it can actually, for us, become better because we could get a whole lot of liquidity. That is the only playbook in history that can actually work now, other than letting the whole economy fail. So we need to keep our eyes open for that. Also, remember another thing. China is the second biggest holder of US debt, right? So the US has debt. The US funds its debt by selling treasury bills. And China is the second biggest holder of US debt. Now, put yourself in China's shoes. If you were holding a whole lot of debt and your economy was collapsing, what would you do? First thing you do, you sell the debt and you use the money to prop up your property sector, right? That is exactly what's happening right now. Or that is exactly what the market's fearing is going to happen right now. And what you're seeing is that the Fed, Treasury, investors, China, Japan, and Saudi are all dumping US bonds. They don't want US debt anymore. And I mean, I don't blame them. If you look at the US debt, the US have got $32 trillion worth of debt. If you look at the US interest rate going up, the US interest rate's going up at a crazy, crazy, crazy pace. The result is that right now, the US has to pay about $1 trillion a year in debt payments. Now, if you carry on increasing interest rates, eventually you get to a point where the US just can't pay off its debts. And that's what's happening right now. Right now, I mean, someone says here, in just 30 years, the interest cost of the Fed is expected to triple to reach almost 7% of GDP. There's only one word to describe such a rate of increase. I think there's more words. There's irresponsible, unsustainable, idiotic, crazy, crazy, crazy. Actually, speaking of increasing interest rates and idiotic, I don't know if you guys saw, but Trump was interviewed and he was asked about Jerome Powell.
I was very tough on him.
A second Trump administration, you have to put up with Jay Powell. What would you do about that? And would you think about reappointing him or speaking with him, or how would you handle that? Because interest rates can be important tools to stop inflation, but they can also destroy growth.
Yeah, I would not reappoint him. I thought he was always late.
Always late.
Whether it was good or bad, but he was always late. I was surprised he was reappointed. Probably he got reappointed because they knew I didn't like him much. I felt that he was not good. In fact, I was very tough on him. And if I wasn't, I think we would have had much higher interest rates for much longer. And we had a boom, and it was primarily, in fact, one time, it looked like I was going to come down on him very hard. And he actually dropped them so much that it was like, he dropped them so much at one time. Remember? And people said, wow, what's wrong with the economy?
You gave him most improved.
So Trump says he wouldn't appoint 𝗍𝗏. He said he's always late. He says he's late, even going to bed. He's always late. I wish they would have asked him the same question about Gary Gensler. Imagine they would have said to him, would you keep Gary Gensler? And Trump would have said, no, I don't like Gary Gensler. I would definitely vote Trump. But wait, I can't vote. But if I could vote, I would definitely vote for Trump if he said, I would get rid of Gary Gensler. Anyway, so going back to it, no one wants US debt. The US debt rate the bond rate is now going up. It is at the same levels that it was in 2008 before the collapse, which is, it's not good. It's usually a bad sign when one, your debt rate goes up. It means people don't trust your debt. But it also means that when the 2-year debt, and you can see here, if you look at the 2-year debt, this is like if you lend money for 2 years, the rate that you get for loaning money for 2 years is 4.9%. And if you look at the rate for 10 years, it's 4.2%. So you'd rather just lend for 2 years than 10 years. That's called an inverted yield curve. Okay, it means that people aren't charging more for longer loans than they are for shorter loans, which is not right, because you know that if I asked you to lend me money for a week, you'd say, okay, the interest rate is X. But if I said to you, lend me money for a year, the interest rate would be higher, right? And so right now, the yield curve in the United States is inverted. And that's a term that economists use. And usually what that term implies is it implies that there's going to be a recession. And that's what everybody's worried about. They're worried about the fact that there's going to be a recession. Michael Gates says, here's the 10-year treasury yield in 1987. It peaked on the 16th of October, 1987. Black Monday, when the stock market fell 22% in a single day, was October 19th. So basically, a high yield rate shows lack of faith in the country, shows lack of faith in the economy, shows people want to be in cash and outside of investments, and they dump the debt. And that's not a good thing. And the market's worried about the US debt. So those are the two macroeconomic headwinds. China, and as a result of China, everybody dumping US debt. We said that Japan may also dump US debt. So those are the two macroeconomic things that are happening, and that is what's got the markets worried. And you got to ask yourself a question. If all this is happening in the market, then I should sell everything. It sounds absolutely scary. Truth is, if me, a YouTuber, is telling you this, it means that the market knows about this already. And so all that I've just told you is already priced into the market. And so what you're getting now is you're hearing the news that brought the charts down. Everything that we've spoken about now is already priced into the market, because as much as I think we're a great YouTube channel, I don't think we know anything that the biggest financial minds in the world haven't yet factored in. And so be careful when you're reading the bad news. When the markets go down and there's bad news, when the news cycle is negative, then the press will exacerbate that by digging for the stories that find the negative news. And that is what usually gets people to capitulate and sell. Now, I'm not saying that you shouldn't sell. I'm not saying that the markets can't go down even more. I'm just saying don't panic, because all of this is already out in the market. You know what else is out in the market? I'll show you what else is out in the market. This is out in the market, and it's absolute bullshit. So there was this Wall Street Journal article which said that SpaceX, in a small paragraph at the bottom of the article, it says SpaceX wrote down, that's what you're looking at, wrote down the value of the Bitcoin that it owns by 373 million. That's what it says. Now, the market, because the market is so scared at the moment, the market interpreted that as SpaceX sold their Bitcoin. And you remember that Elon Musk bought Bitcoin for his companies. He bought Bitcoin for Tesla, and then SpaceX, and there was a representative from SpaceX that went to a MicroStrategy talk, and that's how we learned that SpaceX actually was buying Bitcoin for their balance sheets. Now, they say here that they wrote down the value of their holdings. Now, that is an accounting rule in the United States. If you're holding an asset and the value of the asset is reduced, you have to write it down in your books. And you have to show the real situation of what you're actually holding. That's exactly what happened here. But what crypto Twitter turned this into, and what the market turned this into, was SpaceX dumped their Bitcoin. And the problem is, because there's no liquidity in the market, I showed you this a bit earlier, but because there's no liquidity in the market, when you get a catalyst like that, it just cascades the liquidations. And that's why I think that this market is a little bit oversold now, because there's just no liquidity in the market. And I'm glad that we've moved out of the range, because we can finally get liquidity back into the market. That's pretty much where we're at. So I've got some comments here. I see a comment from one of my friends. I'm not going to mention his name, but he says that he didn't have a stop loss last night and he took a big hit. If you're in that situation, ask yourself a question. Am I holding good stuff or bad stuff? If you're holding good tokens, well, chill, because they're going to bounce back. We've seen this a million times before. We recovered from Luna. We recovered from FTX. What's different? What is this the end of the world? Is there a cataclysmic event that I don't know about? Probably not. If there is, tell me in the comments, but I don't see it. Just hang tight. If you're holding good coins, they will recover. If you're not holding good coins and now you're questioning what the hell you're holding, well, you should have thought about that before. And then you should probably get out and switch them into good coins, because both coins have gone down. So just swap them into a coin that you think is a good coin and get rid of your biases. I'll also show you a few coins that have survived this dip or recovered in this dip better than some other coins. We'll look at that in a couple of seconds. But in fact, let's look at one of them now. 𝗏𝗏𝗏. 𝗏𝗏𝗏 didn't even go down. I want to just show you the 𝗏𝗏𝗏 chart. We've been talking about 𝗏𝗏𝗏 for a while. We've been talking about it since 3 cents. 15 cents. I mean, that's nothing. It is, let's just see how close it is to its all-time high. All-time high is 19 cents. Another one which did really well, Rune. Rune has held up phenomenally well. In fact, if you look at the bubbles, this week you look at the bubbles, up 35% this week. I think it was the only token up today. Injective, also up again. There are some tokens that are recovering faster than others, and you probably want to be in those tokens. So why do you think 𝗏𝗏𝗏, Unibot, why do you think those guys have recovered quicker than all the other tokens? Or they weren't hit as hard? You know why? Because those tokens don't have derivatives and aren't traded on many exchanges, which means most of the holders are buying these tokens on Uniswap. And those holders are pretty much diamond hands. They're not the guys that are going to dump. There's no derivatives, and derivatives make the price of an asset dump because you can trade them on leverage. Now, when there's no leverage, then those prices usually hold. So if you want resilient tokens, look for tokens that are used and what we call the on-chain tokens. Tokens that aren't on every exchange, but you have to buy them very much on-chain. And those are the ones that are pretty much going to recover. And I think later on today, Miles is actually going to do a show about them. You should probably watch that show. We will have Gareth here in a few minutes. But before we get to our friend Gareth, I do want to talk a little bit about ETH. So we do have the SEC approving, or ready to approve, that's the quote, ready to approve, ETH futures ETFs. It is a very, 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 well, there's good and bad here. The first thing is, I want to remind you that when the Bitcoin futures ETFs were approved in 2017 or 18, that was the day that the markets crashed. Okay, so I don't know if it's coincidence, but the markets crashed. Second thing is, it's very, very, very positive if we do get an ETH futures ETF, and I'll show you why. So Adam Cochran wrote this tweet, and I think it's very smart. He says, if the ETH futures ETF is accurate, it may be a bigger event than first meets the eye. Why? Because the SEC can't simultaneously argue that ETH is some kind of intrinsic crypto asset security that is unregistered and approve a futures ETF. So by approving an ETF, what the SEC is saying is, you couldn't have made a futures ETF out of an unregistered security, right? So if you approve the ETH futures ETF, what you're basically saying is that you know what kind of asset it is, and this asset is actually legitimate. And so if they're ready to approve an ETH futures ETF, that's another step closer for ETH to be institutionalized. And then what's logical? Let's get a Bitcoin spot ETF approved, and then we'll get an ETH spot ETF approved, and that's the continuation of the cycle. Okay, yesterday we also had news from XRP or Ripple. So you remember there was the ruling where Judge Torres said that XRP is not a security if it's traded on exchanges, but it is a security if it's sold by Ripple, the company, to funds and other investors. And the SEC wanted to challenge this, and they couldn't appeal this because you can't appeal something until the court case is finished. What you can do, though, is you can ask the court for like a interlocutory appeal. Now, what is that interlocutory appeal? It's like, hey, I know the case is not open, but I want to appeal what you've just said. That's an interlocutory appeal. So the SEC asked for permission to get an interlocutory appeal, And the judge grants the SEC permission to file the interlocutory appeal. And obviously that smashed the price of XRP. We'll look at that in a second. But she also gave dates. And the dates are by 18th of August, which is today. Is it today, James? Is today your birthday? It is. 18th of August. Happy birthday to James. Give James some love in the comments. Shame, James had a really rough day yesterday because the studio technology didn't work so well yesterday, James. Anyway, happy birthday, James. We wish you a year filled with many mushroom trips and protein shakes and parties and whatever you want. Anyway, so let's look at the XRP price and what happened to the XRP price. XRP got smashed. Wow, look at that. Look at that. Went all the way down to 41 cents. Imagine being an XRP holder. Like, you've waited so long for this court case and now this is what happens. Anyway, so that's now being granted by the judge. So they have to file that. No doubt they will. The Ripple lawyer, Stuart, he's actually quite a smart guy. Just listen to what he says. They were ready for this. They knew this was going to come.
They want to clear their name. They want to get to a trial and show that they have done nothing wrong. So we want to move forward as expeditiously as possible to get to that point, not take a diversion for an interim and interlocutory appeal, only to have that be resolved and then come back and have this cloud continue to hang over Brown and Chris, and have this cloud continue to hang over Ripple. The SEC can't have it both ways, right? They can't argue on the one hand, judge, which they did from the very, very beginning. Judge, nothing to see here. This is simply a straightforward application of the 𝗏𝗏 test. We're not asking you to do anything extraordinary. And then when the judge actually applies that test to say, oh my God, Judge, I can't believe you got to this result. You disagreed with me. We immediately have to run to the appellate court to see if the appellate court's going to disagree. There'll be time to get to the appellate court. We're not afraid of an appeal. We think we would win on an appeal. We think we would actually not only have the decision affirmed, but probably amplified. But let's get there in the ordinary course. Let's stop bending the rules or making exceptions to the rules to accommodate the SEC's strategy of regulation by enforcement here.
I think what he says is very smart. He says, look, we actually want the appeal. And I think he's right. I'll tell you why I think he's right. Because if we have the appeal, then, and we win the appeal, and it's obvious that the SEC was going to appeal. Like, think about the SEC. They can't just take all this criticism and not actually appeal. So, okay, we'll just take this line down. They need this. And so what's happening now is if we go to the appeals court, and the appeals court also grants this to us as crypto people, then effectively there's no more argument. It's been ruled, it's been appealed, and both judges said that this is the case. Therefore, it has to be the case. And so on the one hand, I actually want us to go to the appeals court so we can actually get this stuff actually sorted out. I think we should bring Gareth in. What do you guys say? Should we bring Gareth in? Let me know in the comments. If you say yes, do a poll. If they say yes, bring Gareth in. If not, just change the thumbnail and we don't need to get Gareth on. No, I'm kidding. Josh, you can actually bring Gareth on. Gareth, I was scared they were going to say they don't want a bearish take in a market like this, and they would have said, no, we don't want Gareth here. But I have to eat humble pie again. I have to eat humble pie again and say you were right.
Thank you, buddy.
I hate doing
it's all right.
that.
It's all about just doing our best, right? I make plenty of mistakes. I've made plenty of bad calls.
So you know, Gareth, you know, there's a time difference between where you are and when I am. So like when you're wide awake, I go to sleep, and then in the morning, and we have like overlapping hours. Like I know I texted you this morning, which was like 4 a.m. your time. I think you were still awake. But you know what's like really shit? I'll tell you what's like really, really shit, right? Imagine you go to sleep and then you wake up and you see the market completely red when you wake up. It's a disaster, right? That's shit, right?
Yeah.
You know what's worse than that?
For what?
Okay, I'll show you. When you wake up, hold on, let me just switch the screens here, and you read a tweet like this, and the tweet's quite long, and it says, we flashed through 28, and you'll walk us through the scenario, but when you get here, it goes, my thesis for why Bitcoin could hit 9 to 10K is an overall risk sell-off. That's not what you want to hear after like a rough night, is to hear that Bitcoin can actually hit 9 to 10K. So walk me through your tweet. Walk me through your thinking.
Okay, so listen, and the first off thing, I always want to preempt it with saying that overall Bitcoin is going to be fine. Like, to me, I'm just using it as a buying opportunity. As it comes lower, I'll just dollar cost average. So I think that's important to say first and foremost, is that this isn't the end of Bitcoin. In fact, the more people that say it is, the more bullish I'll become. Look at when we were at 31,000. There were so many bulls. I was made fun of endlessly for saying we weren't going to break out there. And look at what happened, because the crowd was on the wrong side. Now, the key here is this, is that the only scenario I see Bitcoin getting down that low, 9 to 10,000, would be as if the NASDAQ and the S&P sell off back to October 2022 lows or lower. Aside from that, I don't actually see Bitcoin getting down there. Like, there's no real other bearish scenarios for Bitcoin. That's the only one. It's a risk or credit event.
Wait, so earlier on the show, we spoke, and I know you were live, so you probably didn't hear it, but we spoke about Evergrande going into liquidation or into bankruptcy. We said that 70% of Chinese wealth is actually in property. This could be a contagion of all the property developers in China. A contagion of the property developers in China could take down the Chinese banks, the lenders. Who are the lenders? The lenders are American banks and whatever else. Question is, do you think that this is the collapse of China and this could bring down the markets to, I mean, I don't remember when the last time China collapsed was, but it's a catastrophe.
It is nasty in China. I do not think China is going to collapse, though. The positive that China has going for it versus what the U.S. has going for it is that they have deflation right now. Now, deflation is not good either, but what it does allow you to do is print a ton of money. Right. So they can come out and they can print, and they will do this. And remember, they're different than the U.S. and most countries, where their rule, whatever their leader wants to do, they're going to do. Right. So they don't have to worry about congressional approval. Or
they don't have the Democrats and the Republicans pulling left to right and
like that,
masquerading on TV and fighting for women's rights and black rights in order to negotiate a debt ceiling limit. They just put the debt ceiling limit and do whatever the hell they want.
They say print 5 trillion, done, and we got the digital yuan now. We just have to click a button.
Okay, so you think they're going to do stimulus, and they actually have been in the market for the last couple of days buying and stuff like that, and putting money.
I think Monday morning when we wake up, or when I wake up here, I would not be surprised if there's a massive stimulus unveiled in China. Now,
as quickly as that, Monday morning.
Well, they don't. Yeah, I mean, they don't have to discuss with Democrats and Republicans, like you said. That's the beauty.
I suppose so. All right, walk me through the chart scenario. So I'm going to switch to your chart over here. Here's your chart.
So this was a level, and being on Spaces with you, I've talked about this with Scott and you and so forth. We knew that this upsloping trend line from down here was an epically big trend line, right? That has now broken. That's problematic. That makes the concern for maybe a retest of the lows a lot higher probability. The next level you're looking at is this low. Now, this low happened to be when that BlackRock ETF spot news hit and the run up we got from that. So this psychologically is going to be a big level for a lot of investors, because a lot of investors bought with the concept that this approval is going to be the catalyst for the next bull run. If we get below that level, that's going to really shoot a lot of people in the foot, and they're going to kind of question that narrative. I still think that the approval is going to come, and I think it's going to be a great scenario for Bitcoin, but that break would be a big one, and that's at 25,000. If we go lower, let's say 25 does break. Where's the next stopping point? This low here, which happened to be when Silicon Valley Bank failed, and we had all those banks failing, right? And that created this huge run up in crypto as well, or in Bitcoin. So that's another key level. As you go down, each level that breaks, it basically opens the door like a magnet, pulling the market to the next level. So really, you could see now we're starting to trade down on Bitcoin here. I wouldn't be surprised if we touch the 25K level, probably within maybe even this weekend. Now, I think some exchanges, you saw a bigger flush where it almost hit it already. I'm on Bitstamp right here. It didn't get that to that point per the chart, but I think that probably will get tested. And then again, if you're a bull, you need that 25 to hold, because if it doesn't, it opens the door to 20,000.
Yeah, it wicked down primarily on the leverage exchanges. So I mean, this is 𝗙𝗵𝗶𝗆 perpetual. And the reason why it wicked down is because there's just no liquidity in the markets anymore. This is the lowest trade volume that we've had on Bitcoin, I think, ever. Well, not ever, but when I say ever, in the modern Bitcoin era. This is the lowest liquidity we've had. And the problem is that when you get forced sales in a low liquidity environment, there's just no buyers, there's no liquidity. And so that's why we're getting this dip. Gareth, I saw Bitcoin dominance break the trend, but actually to the downside. So I mean, if you call out the Bitcoin dominance chart, let me know what you think of, you had a thesis that dominance was probably going to go up. Here's dominance, and dominance is going down.
Yeah, that was a big, because I think what you ended up happening is there was a lot of stops triggered and a lot of panic that hit Bitcoin. I mean, if you look at Bitcoin, it's held up so well in the alt scenario where the alts have been getting crushed. And then, so this was almost like, for a lot of investors that are relatively new, this was almost like a shock. Like, holy cow, Bitcoin's barely moved 1% a day. Now it's down 10%. This scares them. And so it creates this additional selling pressure. So at least in the short term, we're seeing the Bitcoin dominance come down. But I would say that I do expect it to rebound over time and start to gain traction again.
What do you think of US Treasury yields? Like the 10-year going up to 4.3%, the 2-year going down to, I mean, what's the thesis here? Like, do people not want US debt anymore? Is that what they're telling us here?
Yeah, it certainly means that people are a little bit more skeptical, right, of buying. How much can they load up to as a country? We know Japan is the biggest holder of US Treasuries out there. So it certainly means that they're demanding a higher interest rate. It also tells you that the thought process was that inflation was very short term. We were going to get it down to 2% very quickly. Now the thesis is changing to say, okay, we're going to have inflation higher for longer. We're going to be stuck at 3.5%, which means the long-term treasury yields have to go up to compensate for that. They weren't going up. Now, remember, when the yield curve actually uninverts, that's where recessions usually come. It's not the inversion, which we've seen for the last 6 to 12 months. It's the uninversion. So
what you're worried about is that the 10-year continues to go up, meets the 1-year or the 2-year or the short-term thing, and that's when the inversion happens.
I think that's when you'll start to see the recession, or people start to recognize that we'll have a recession as well.
Take me to stock markets quickly. So let's just quickly jump into stock markets. NASDAQ, SPX. I mean, I guess all of this doesn't bode well for those.
No, there's definitely long-term. Remember, the higher the long-term yields go, it gives people an alternative. And this is why, you have this dividend yield on the S&P. It's at 3-4%. Once you start seeing treasuries and yields go above that, it gives people an alternative where, yes, you can't make 20-30% in the stock market if you're if you're in bonds, but it does give you the safety of having this high return without the risk of stocks collapsing. And so there's always a certain amount of money that's going to flow over to treasuries as the yields go higher, because they say, you know what, this is too scary for me in the stock market. I'm going to move over. You can see we've come now well off of these highs. The next support on the S&P is going to be, the spiders here is around 431, but this is now a big sell-off from the highs. The narrative of, hey, we're going to new all-time highs, it's a new bull market in stocks, is now starting to take a hit. One thing I'll say is just notice this. This is the bigger picture. This parallel line from these highs to these lows. If we get down here, if you're in the bull camp that this is a new bull market, that has to hold. If this 418
is the level. Okay.
Yeah, if that and notice it's upsloping. So in a month it'll be 422. You have to kind of follow it per the upslope. But if that breaks, now we're heading back to October lows. So that's the line in the sand.
Are you buying yet? Are you selling? Which trigger is your finger on?
So interestingly enough, I've been short at the highs, and I was pretty heavily short. I've been inching out of some shorts, taking some profits off the table, and I'm actually inching into a few longs. Now, I picked up a couple. I picked up a little Matic. I picked a little.
Wait! Stop the show. This is the first time in the history of our show that Gareth has actually said he's going long. Okay, let's start again and tell me, what did you just pick up? Because this is much bigger news than we thought.
Well, but please, everyone, understand I'm a swing trader, so I get a 10% bounce. I'm saying thank you very much, and I'm exiting the trade. But I mean, if we just go to Matic, right? So we have Matic coming down here. There's this low here, and then this low here. So I start to nibble a little bit.
Okay.
Oh, there we go. All right. So we're getting close to these lows. We're at this low here. we have a lot of support starting to come in here. So for me, it's just I start a position. Essentially, I put 1.5% of my portfolio in it. If it comes down another 10%, I'll put another 1.5 or so in, and I slowly accumulate, because ultimately there's a lot of fear, and we'll eventually get a snapback, right? Eventually this fear will see a snapback. Once we get that snapback, I'm out, right? So same thing I actually did this with a few different ones. Cardano, same kind of deal. I picked up a little bit on this flush. Same thing with Litecoin. I even added a little Litecoin today, or yesterday, in fact. And you can see Litecoin again, lots of support on Litecoin here. So again, going to stocks, I mean, look at some of these stocks. Look at Square. I mean, look at the drop on this thing. I mean, it looks like a crypto chart. It looks like a small crypto chart.
A lot of its revenue is actually from crypto, which is probably why it's getting punished.
Probably right as well. Yeah, exactly. Yeah. So there are, I mean, there's a lot of stocks out there that have, and again, this is a very shorter term trading strategy, but I like to see panic selling. I buy panic selling. When people calm down, there's usually some short covering and some snapback, and I just sell right into it. And then same thing, when everyone's saying long and I'm getting ripped on Twitter, I'm like, oh, this is a great signal. I'm getting ripped on Twitter. I'm like, counting my money already there, because again, it tells you that the top is in or likely close.
Okay, so listen, you and I don't always agree, but I think I've got to take my hat off to you and say that as far as people that I have interacted with in crypto, you get a lot more abuse than most people. You've learned how to take the abuse and turn that into buying and selling signals, which has been amazing. And I've been obviously watching your hit rate, and you think your hit rate is like over 90%, 95%, which is what most people don't know is that that's unheard of in this industry. Like usually as a trader, you want to get 55% right, 45% wrong. You're doing amazing. Gareth's hit rate is about 90%. Now, Gareth, I know that I don't usually shill your product here, but I'm actually going to do it today. So I know that you keep a record. So you have a group. That group, you share all your trades with live, right? Just walk me through what you do with your group. It's called Verified Investing. So just walk me through, what do I get if I'm part of Verified Investing? And again, I don't usually talk about people's courses when they come here because I really want credible interviews, but you've just called it right so many times that I think it's just worth showing the audience what you actually do. So
yeah, thank you. So I'll just summarize. I like to keep this short. I'm not a big fan of kind of talking about my own stuff. But I will say this is that if you go to I don't know if you can show my screen, but there's the crypto trade alerts, which is where I have that. And then if you scroll down, you can see the hit rate, how many trades. And the one thing I don't do is I don't overtrade. Like I learned my lesson in I've calculated it out, 24 years of trading now, stocks, commodities, and now obviously crypto. And you learn a lot. You learn that less is more, being patient and disciplined is key. You look for setups, not hype. All of these things add to that. And again, that's kind of what I deliver here. So if you're looking for some place to come where you're going to get 1 million trades a day, that's not me. I'm patient. I'm disciplined. I'll only put out the trades when I'm thinking this is a very high probability setup. And then at the same time on that website, you'll find my Winning Trader series, which is all the knowledge from 24 years. I look at it like I could die tomorrow. I want people to be able to learn this and do it for themselves. That's where you go for that.
I did it actually. I had COVID once, and while I was in bed with COVID, I had COVID for like 5 days. And while I was in bed with COVID, I did the courses. Guys, it's $75 a month. Wait. Yeah, it's $75.
Guys, just one thing I want to point out real quick is that you would have had COVID for 10 days if you hadn't taken my course.
I love that. Listen, guys, it is a link below if you want to go and check it out. I'll show you the link in a second. It is, again, I don't like to shill paid groups here, but that's what Gareth does. He does it very well. And I know a lot of you, when the market's running, you always call him Beareth, and I don't know what else you guys have called him in the past, but he's right.
Worse things than that.
He's right. He's got 96% call rate. Go and check it out. $75 a month. There's a link below. Special gift to Banter people. You get 1 month free. Gareth doesn't know it yet, but you do get 1 month free if you use the link below. He's just found out, as you can see on his the look of his face. Yeah, much love, brother. I'll speak to you over the weekend.
Thank you, Rand. Thanks for having me, buddy. Always nice to talk.
Cool, buddy. Cool, buddy. Yeah, guys, I don't usually talk about Gareth's paid course, but it's not a course. I mean, you do get the course, but it's $75 a month, buys you his calls, and I think do it. You get 1 month free. I haven't actually negotiated the 1 month free with him, but I will negotiate it after the show. Otherwise, I'll pay it. Let's quickly look at the news group just to make sure we haven't missed anything, because there is a lot of news happening all the time. Newsroom. I think pretty much, I think we've covered everything. Pretty much everything's drying up. Yeah. So listen, I'm going to be here on the weekend if something happens. Otherwise, I'm not going to be here. Otherwise, I'm going to be on Twitter Spaces now. I'm 5 minutes late because I've been with you guys and I've been with Gareth. See you guys there. Until then, thank you for joining us and trade well, my friend. Oh, whoa. Stop. Hold the phones. Don't go anywhere. We are looking for researchers, guys. We are looking for researchers. So if you are absolutely obsessed with crypto and you want to help us make content for the shows, or if you just want to join our research team and be a volunteer, you got to mail a one-pager of your crypto experience to research.recruits@cryptobanter.com. Mail the cover letter. If no cover letter, we don't read it. And only do this if you really want to join us and you really want to be part of our research team. So listen, guys, much love. See you guys again tomorrow or on Monday. Until then, have fun. Trade well, my friends.